All right, I am feeling better about this one. It's only a few minutes past the top of the hour, but I'm hoping that the little bit of a different screen share is now coming through. Awesome, awesome, awesome. I appreciate it. So, I don't feel like we really missed out on too much. Again, I do apologize for the delay, but sometimes that is just the nature of the day. So, like I said, I appreciate you guys being there as we get into the final now 50 minutes of the cash session. We've got a few levels that I'm going to be going over with you, a couple of swing based perspectives, and of course, a recap of what we have to look at for this week's events. So, okay, I appreciate you guys confirming all of that. But as we get into the end of day, part of what I've been working to refine in my trading and really, find an edge for my setups are the end of day unbalanced flies. But I think days like today are honestly some of the more difficult ones to call for. Now, I will tell you that in the earlier moments of today's session, I came into today considering the idea because one, I knew that I would be looking at trading the close with you guys today, and I just tried to be prepared for, what is the strike of the day. So I talk a lot about how markets move in between voodoo lines and key gamma strikes, and that probably works the very best in SPX. You're going to find it in anything that carries a good deal of liquidity. But what that means to me is essentially when you see on Friday, when the market really does not get the opportunity to hold 4,500, you notice that it opens just below this large psychological value and then gets pummeled throughout the entire day. Closing, let's see, what was the final closing price here? 50.32. So it's the pin, it's the psychological value by 30 cents. So as you see that strike, you have to carry it into today. Now, I believe it's a mix of two things. One, it's, carrying that level forward, but then it's also noting that once you get through the witching expiration, all the notional value that is stored up in these quarterly contracts has now expired. So to see the market be a little bit more volatile and to see some range expansion is very much something that can come through. Now, the market seems to have mostly avoided that for most of today's session, right? We're up two, which is about as close as you can get to nothing having happened. But, I am leaving the potential out there for essentially another 50-point break. If we work with this idea further, and it's trying to tie in a little bit of the swing-based conversation, but then also think about today's close. For today's close, everybody's going to be looking at 50, but the decision of 50 is never as simple, I don't think, as just throwing on the iron fly. That one can work. And of course, if we pin exactly at that level, I'll probably wish I would have taken the trade. But I feel like it's worth getting into the unbalanced conversation, right? Whether or not it's going to be above or below the level. But to further my point here and the potential for this, next leg lower, look at how we've got this measured move. Now I'm going to do this two ways for you. It's already drawn with the three-pointed tool that Thinkorswim provides, but I've always enjoyed studying the market, thinking in terms of almost like the personality of a person, where it's like if I've seen you do something before, maybe that means that you'll do it again. So in that way of thinking, if we measure this move and we just say from the 9-1 swing high down into the low made on the 7th, look at how that measured move, the projection that just says if the drop that happens here is like the drop that's happened before, that's going to take us exactly into the double O, right? The 4,400, it's 440120. So $1.20 off of what will also be that huge psychological price point. So I just think that's an interesting spot that, especially if you're bearish, you should probably be looking to target. We could always get deeper down into a corrective move, but I know that David has some patterns that he's looking at as well that suggest at a minimum we need to get below the 4430. So that would satisfy that. That would make that symmetrical move. And that would be an area that I would be looking to see if there was any kind of bounce to be had. But that's kind of what I've got for you right now in the S&Ps. As I think through kind of again what I would be doing just if I was not working to find trades for other traders. I'll flip back and through these a couple of times, but I would look at this advanced decline, which is another part of what I think is a very difficult thing to try to call. If anything, maybe this type of a pattern and the advanced decline leans more towards the iron fly, right? Where we actually stay at that particular strike and we're not either above or below it. Because I'll look at this and try to find a trend on the day. So while there was a meaningful bounce for it, you can see that it really ended right there at the 12:30 Central, right? This 2.5 hours before the cash close can often be an inflection point. So that is right where the bounce of the advanced decline ends. It then goes negative, and I think that just attributes to a little bit of weakness, but that value is also only a negative 95. Negative 1,000, negative 1,500. Those are different games. So, like I said, I think that's part of what has me just kind of leaving this trade alone here a little bit. We can price out. If you guys caught JC's close on Friday, he really did a great job of showing how these pinning trades work. Now, he did his unbalanced butterfly for a debit. And again, that's also part of the problem that we're getting into right here, is that this far into the afternoon, you're just not going to have as meaningful of a credit, if at all. So, like I said, I think we could put that trade on again, but at a 60-cent debit, I really don't want to do that there. So, like I said, we're going to keep working through all of this. I believe the highlight of the conversation essentially says that the path of least resistance is lower. Does it do it directly from here? That's kind of if I knew exactly, I would tell you. But as I work to continue to try and find my best spots of high probability trades, we'll get into a few more equities. When I tell you that I think bears have a dominant stance for the time being, a big part of that comes back to Apple. So Apple's making a big showing today, but to me it also feels like this is one of the very few parts of strength. So when you look at a kind of a mixed bag or a market that today is just so quiet, you can look to Apple and say, well, there's your leadership, right? There's the names that are really doing the best. Can they help, continue to lead the market higher? Or you can look at it from the perspective of this is really the only thing that is hanging on. So if it gives up these gains, and I believe the pattern here is absolutely susceptible to that, well, then we're going to, see the market that once they give up Apple, they give up everything else. And we make that next leg lower down into SPX 4400. So, I can give you a brief recap like that. I can go into more detail. Again, if I'm not going to be taking a lot of super short term, because I got to remember for myself too, in a broadcast like this, the posting, the managing of trades is obviously going to be a little bit different. So it feels like a pinning afternoon, but it also feels like an afternoon where I am better served by just leaving that alone. But it all just kind of, I was just wanting to finish that thought by saying, down here at 165 looks like the spot that I want to watch in Apple. So a little bit conflicted because you do still have a monthly squeeze that is fired long. But remember that big picture time frames like that, their squeezes, their signals like this will not last forever. And what ends them is the shift on smaller time frames. So you've got to be a little bit more in tune with that. And just the break of 180 for me is every bit of that. So I don't know what to tell you exactly the trade would be there, but I know I can tell you that is resistance, and that's going to be a huge decision point for the market going forward. So all of this really melting, kind of like whatever your favorite melting analogy would be. And the biggest part of equity deterioration could probably be attributed here to the movement in the dollar. Now, if you've followed Simpler for any length of time, you've probably heard this conversation, but I feel like it's still worth keeping an eye on, especially from this shorter time frame, right? Like as we assess as we get into the end of the day, and I think Do I really want to try and sell that SPX 50 put? Probably not. When the dollar is doing like this, again, not always going to be a tick for tick relationship, but I think close enough that I keep it in direct view throughout the day. So that's a little bit problematic and has been also from the swing perspective. So once we started getting above about 104 or so, I was thinking that 106 and 108 are next. So in most logical worlds, this and TNX are the biggest headwinds to any continued equity strength. And also, as I think about, like, maybe I do have a different crowd this afternoon from folks that are tuning in just through the YouTube, access point. But like, this is something that you really have to make sure you've made note of, because I really find it fascinating that, one, you have a low compression squeeze and play, which sometimes can be a unique signal. I keep both squeezes on my charts because this one on the bottom is how I grew up. It's the signal that I have studied the longest. And being a kind of visual learner, I just find it really helps to keep it on the chart. But at the same time, the Squeeze Pro and the adjustment of the relationship between Bollinger Bands and Keltner channels and what measures, contraction and expansion and movement, this is a worthy signal to watch. So it's all just saying, as we get into the next, call it 3 to 6 weeks, if that daily squeeze is taking TNX up into, again, the most fascinating part of it is the perfect 1618 at 5%. So if that's what's underway, then you got to think that that however it takes for that kind of big picture prospect to unfold, if it does, is the same way of thinking that's going to keep Apple below 180 and on a path into 165. So I'll get into the rhythm of covering the markets here with you guys. I know it's been a little bit of a, like I said, an interesting start to Monday, no doubt. But that's the biggest picture of weakness out there, going from kind of the debt and currency thought process, taking it down into your most important tech component. And it's just a market that needs to dip a little bit deeper before you set up any kind of really good advance. So that's my first glance again at the biggest, kind of most important stuff. There's a lot more than that, right? Because you take that conversation and then move over into Microsoft, where it's basically the same thing. Now, it depends on how far back you want to take this conversation, because I've covered it again, like really with a lot of intricate detail. Because on a week to week basis, you can really do a good job of working to figure out the action if you complement those gamma strikes, essentially because there's so much notional value that goes through weekly contracts. So that positioning can very much help drive short term trade. When I really started getting into this for Microsoft, it was the support at 327. That's also in line with the snow line and the idea that the squeeze would provide some bullish movement. We got a good couple of weeks of that, but then we know that there's a certain degree of caution to it being below a primary 618. So it's trying to get it into the fire line to accomplish that target, knowing that that will be pivotal resistance if it is met, but of course does not get there, and now we're 3 days straight down. So could it bounce? Sure, but more of that thinking 3 to 6 weeks from now. To me, it strikes me as a pattern that is very difficult to get higher out of. If something changes, then I'll have to address it then. But for now, it looks like a pattern that is going to be much easier to get lower out of. And wouldn't it be nice to pick up some Microsoft around 300? So lots of patterns out there of very problematic products, and a spot that, I think if you're going to trade it, you of course focus on that bearish exposure. I guess for me with equities though, I don't usually do a whole lot of shorting these individual equities. They look bearish enough, and I'm going to update a few more with you. But, I'm usually focused more on the index itself for shorts, and at SPX 50, we're just a little bit stuck. So again, showing you a few more out here that are a big part of the bearish story. I'm working on recreating my charts because a big part of them is not syncing through Thinkorswim. you're supposed to be able to create a drawing, and for the most part, they'll reciprocate anywhere you pull up the symbol. Regardless, it gives me the opportunity to show you, like, the when we were just running TNX, and I was showing you how the 1618 can be such an important proportion. Notice that here in NVIDIA, swing high to swing low, and the 1618 is the spot of failure. So after you have something like that complete such an important target, it's going to tend to be a wall of resistance. And I really don't think this is going to be anything worth buying until you can either recover the 21 EMA or until you get sub 400. Sub 400, great. That's a spot to set up the next bullish run, potentially. But for now, it's a little bit more problematic. Flipping back over, you can see how that SPX spread just continues to expand. So what was a 50, 60, and I think JC paid about 50 cents. Maybe it was closer to 30 for his unbalance. But, as that idea starts to come through, because what's happening here? Well, SPX is sitting just above that key strike. I've got it at 51. So it's a little bit of splitting hairs kind of trade, which you either enjoy or you don't. I was also, I liked watching him just leave that to cash settle, because I think so much of that trade is just deciding, like, I'm either going to let it just go all the way to the close, or you do try to manage early, but once you've made that decision, you don't sit there and sweat it for the rest of the hour. Well, like I said, I'll try not to focus on just the index-based products. It's just knowing that right here, I can't really set up much with you in the way of a fresh, like, bullish equity swing. So what is the end of day opportunity? Again, I think it's something around 50, but I just can't get it for a price that is meaningful. Maybe next time I'll be more willing to put that trade on towards the open. But yeah, like I said, it looks like the stream is all working well. I appreciate you guys for spending a little bit of your afternoon with us as we chop through all of the premium that is stuck there at the 50 strike. A few other names that most people are interested in, so we can take a look at how they have been trading today. In the case of Tesla, I'll start off with the daily chart and the movement that you've seen here around the fire line. Now, talk about a funny spot to just see the war of analysts, because here's where you caught the upgrade through Morgan Stanley, right? That was a big part of what was driving Monday's action. And on that gap, notice how you open right at the fire line, and in the first couple of minutes of the day, you start to see pretty plainly that that's going to be an area of support. That's how these voodoo roadmaps are so helpful, is that from that point, we start to infer that little bit of information. And if that is going to be a supportive area, well, then it should move to the snow line. The next day, it does it almost to the penny. Now I'm showing this to you on the daily chart because I know there's a roadmap in here that is helpful, and that's how I like to look at them. You can take the exact same levels and bring them down into the 15-minute chart, and now you see it in a whole new light, or like with a whole different clarity. Again, once you've used them long enough, you're getting the same information on the daily chart. But now if we look at it on this 15-minute, you can see support here takes us right into here. And that is the battle that continues to be waged. I mean, it's truly just right on the money, right? There's another instance where I've been quoting it as the quad sevens, just because I enjoy the poker reference and because it helps me remember it. But if you ignore the two, because we all know Tesla's somewhere in the 200 range, right? But then it's just $77, 77 cents. And then on the other end of the spectrum, look at the low today. Again, that fire line is 263.73. The low was 263.76. So does that mean that that's going to be the low tomorrow? I have no idea. I would never try to continue to emphasize that. It was an important level before, so I want to give it that same credibility here. But, everything is under a little bit of pressure too. So I'm going to watch it. I mean, I'd like to catch the next move with you guys back up into that quad 7 area. But all the same, if the market is about to make the SPX 4400 move, well, then I'm not going to be trying to buy Tesla. I want to have that cash to where it's on the sidelines. And then when the dip happens, then I'm going to be picking that up. But I like that one for a buy. within those parameters, again, Apple really trying to lose its bid here. So remember that 180 is a wall of resistance. Now that it's turning lower from it, like I said, the Apple lose or the market loses Apple, it's going to lose its footing, and then it may also lose that 50 strike. But let's kind of keep the pace here a little bit. I'm also keeping an eye on AMD. The 618 here has been at least a level worth studying, though it has not provided anything in the way of real strength. The 618 that I'm showing you is off of the lows down here around $81. The advance moves you into 132.83. And from that swing low to swing high, you can see the bounce that has been happening at 181. Now, some could look at this and tell you, well, it's just bouncing at 100. It's a big round number. That's fine. That works. The fire line is 97, so that's a little below. But it's, between the psychological value, the fib retracement, the fire line just a little bit below. I'm just curious if this is going to be a spot for AMD to try to make any kind of a meaningful bottom into the first quarter of 24. So, I'm talking 5 to 6 months out on this idea, but, I'm either wrong or I'm just early, which is part of why I can't really take any action on these trades just yet. But all the same, do you look at it after selling off for these 3 months and think, okay, now I'm going to get short? I can't find the edge in that for myself, so I'm kind of forced to consider it from the other direction. And at least for right now, there are just no real triggers to do that. So, like I said, as I continue to try to find helpful points to follow in this market, the dollar strength is now kind of, I think, putting a little bit more of a dampener on things. It looks like they may try to end it right at 50 again. Also, remember, we try to use those projections to help figure out where price may be going to the downside. But you can also use sentiment. I think this is a great way of working to figure out, like, if you are bearish, in a lot of situations when the market gets really emotional, you don't necessarily know how far it wants to fall. You can use things like, all the stuff we've discussed to this point, or you can also look at it and say, I'm going to let it continue to fall until you get some type of an extreme reading, right? And we're just nowhere near that yet. So the selling is more kind of controlled demolition. Controlled demolition will continue to tear things down until it gets to the point of panic. And then once everybody is panicked, there's a huge influx of put purchases, and that will help put a floor in the market. It's nowhere near that yet. If anything, like I said, it's still pretty weak. So 4,500 in the futures, failing there. And then we'll just see how close they try to pin it at 50. Or if it gives that strike up as well. Let's see, what else you guys have in here today? PayPal is a request. I'll try to keep those here in the corner of my eye as they scroll past and see if there's anything worth commenting on. PayPal is kind of a difficult company, I think. When you look back, and for myself, I'm usually trying to identify my best growth opportunities and my best trending opportunities. And I just don't know that I see it in PayPal. Like anybody that you ask their opinion of, just got to give it to you as, because if somebody's like, especially opinionated, it's like, I don't know, how do you carry much of an opinion in a product that is mostly traded 60, all the way through here? I wouldn't tell you that 60 is the floor. That seems like pretty dangerous thinking. So, I'm not going to buy it. I probably wouldn't have a lot to do with shorting it. If you would like to short it, the easiest way to do it is off of the reversal arrow. Remember, signals like this are very, very simple. Stuff that sounds kind of maybe opaque, like, what does the reversal mean? Well, it begins with the assumption that you're in a downtrend. So if we're just going to assume that, then what we're looking for are the highest values traded in the past 21 days. Once that high is made, you look for the bar that closes under its low. So do you see how that it's just a way of thinking, all right, there's a current. There's a way that things are going. When it goes against it for a little bit, I want to use that opportunity when it turns back in favor of trend to get involved. So it's a very basic way of following price. And then it would just say that it is a short until you get a daily close above 65.73. Everything below there, I would try to target at least below 60, and then 57 half is the decision below there. But I hope that helps. Like I said, thanks for joining us through today's broadcast venue on what is, like I said, it's a interesting day for tech, interesting day for the markets. Tough to find the spot that I can really put on risk with you in these moments. So I'm probably just going to have to be a little bit patient. If there are other questions or symbols you guys would like to run by me, I'm definitely listening. Otherwise, it's a market that just wants to break, and I struggle to find the edge in buying a put. So that's just me. I am still keeping an eye on a lot of these other, what I think are basically flawless charts. I've told, and I like trying to be able to be publicly quoted for a lot of this stuff. Not because I'll be right, but just because I want people to think about buying Google sometimes before it makes this new lifetime high. Why would I say something like that? Not just because I'm inherently bullish on Google, but because there are so many products that have gone through these corrections, right? They all look the same. So many of these charts carry the same kind of through the bear markets, they all went through those corrections. It's the bounce that I find is the most curious. You can find that in the bounce, the 618 here for Google was an inflection point. This is a 3-day chart. So you spend the better part of, a month kind of digesting that as resistance. You pull back from the 618, but now you're aggressively through it. And it's just trying to use the idea that a clearing of the 618 starts to create favorable proportions for your extensions, because it works in a couple of ways. It's getting above this that starts to create the energy, the anxiety for a test of the old high. And then if you can get to the old high, again, you make independent decisions along the way. But that's a big picture pattern that's been out there that I like a good deal. Again, rising short-term rates could definitely put a dampener on all of this, but I just like 159 is my target, and it is all just a matter of time until it gets there and finding a market that cooperates with it instead of it being, Google's up 0.6% today inside a market that just feels so heavy. We're gonna have an easier time trying to really buy Google if the market wants to go as well. So, without a doubt, a little bit of a patience game. As far as equities go, most of what I've got in my watch lists for today are all names that I'm looking for my spots to buy. So, in applied materials, we can kind of look at this the same way. I wouldn't give too much thought to the monthly squeeze, right? It's got the low compression variety, so that's not much to write home about. But in that same way of thinking, from 167 down into 71, you can see that the rally up through that has cleared the 786. So that, of course, puts you well above the 618. And then that emphasizes targets at 193 and 226. So in that big picture way of thinking, I'm then going to try to find my best spot to buy it here on the daily chart. The 200-day has been tested, or excuse me, the 100-day has been tested today for the first time since kind of the middle of May. So I don't know that that's terribly meaningful, but what I would do right here is just the opposite, where we were looking at the reversal arrows to sell it. Look for a spot where Applied Materials makes the fresh 21-day low. Then, on the day that it closes above the high of that bar, that's when you buy it and start to target 166. If there are some of you out there that are not using this indicator and have never been exposed to it but are taking notes, I would encourage you to write stuff like this down. Like for applied materials, above 134 will take us to 166. Now, any technical viewpoint that anyone gives you, it's like I'm saying, below here, okay, all bets are off, and maybe it's headed to 114. But I've used this work long enough to just see the relationship that when the fire line back here starts showing us that this is an area of support, it wants to go reach the other end of it, to reach this proportion that just unfolds in the markets a lot of times. So I like applied materials for that way of thinking. I don't think we can give Friday's volume too. I mean, it was a down day for sure, but just remember that a lot of volume is going to come through on the Fridays of expiration just because of the rolling and managing the adjusting of positions. So much goes on in the hedging of all of that. So to see that huge amount of volume is just part of it. Like I said, targeting an AMAT at 166. The market that has just felt so heavy. I mean, literally in that last breath, I I had the thought, I ignored it for a moment, but I was like, I am just going to go short the S&P futures because that will give me something to do. That will be entertaining. And we'd be about 6 ticks on the wrong side of that. Let's see if it ends up being better into the close. Part of this, like I enjoy trying to dig into nuanced analysis and offer all of the detail that I can into the close because that's what I do. But remember that there's going to be easier days. There's going to be those closes where you look at the advanced decline and it's, at a 45-degree angle in whatever direction. But that's when you're not having to make all of this really like, gosh, which way is it going to be? It's a little more obvious, and that's when we want to trade. So let's see, Kyle, seeing your question in here too. I entered the unbalanced fly at 50 at 380. If you got that at a $3.80 credit, I mean, I would say that's pretty remarkable. You would have had to have done it earlier in the day, which if you heard that conversation I was having, like that really did go through my mind through the open today because that's our critical strike. But I was a little apprehensive because it's the Monday after a witching expiration. So all the notional value, right, that was tied up in last week's, all of that's gone. So if we broke 50, I was just a little concerned that it was going to be more like just a bigger down day. But if you went ahead and took it earlier in the session for a 380 credit and you only have one of them, I think you have to take it off. Right now, I know I've discussed this in a couple of ways, but let me give you my reasoning. And it's just that if you're getting, one, that's a great credit. Like you're in perfect shape, right? You're exactly where you want to be. So the trade is making you good money. And the risk that increases in those final minutes is huge. You can take something that is going perfectly in your favor and make a huge mess out of it in no time flat, right? I mean, what's sitting here and playing like, this game of precision at 50 that looks so good, they drop it to 44 in the final minutes of the day. It would be mostly noise, but it still ruins your spread. So I think if you're just trying to trade a spread at a time and grind out a day-to-day good income type of day trading, you take your win. And then if you can start trading multiple contracts, you let that win cover the risk of your other spread, and then you see if you can let it pin. But that's all, kind of, I think, pretty common thinking in trading. It's a little different with spreads. But always enjoy a good unbalanced butterfly question. Looks like some boring trades are the way to go into tomorrow. So where I would take that comment further, and we can do this, with live prices, because that idea, of course, crosses my mind too. And when you think, okay, we're going to, because, the Fed's not until Wednesday, right? So you could have that idea of let's come in and do the iron fly. Because none of us are going to do the short straddle, right? So we just come in and look at the iron condor. By doing the iron condor, thinkorswim will position half of the spread correctly, really a quarter of it. But the expected move is $23, so I'm going to default to a $25 wide fly. That would imply the 50, 75. And that's going for, let's say, $16 if we get a decent fill. Keep that price and look at it into tomorrow. it would be my guess that the volatility does not come out of these as easily as you might expect, right? That you'll see this, like, and this is assuming prices are at here at this 50 strike. If things are weaker, well, then that doesn't work either, right? You'll take too much heat on the put side. But I just think about these situations where you look at it and you think, all right, it's quiet, it's sideways. Let's do the short premium trade for tomorrow. So you put it on, and then the market's quiet tomorrow, and the premium doesn't come out. Eventually, it will have to, right? When those contracts expire, there will be some kind of settlement that happens. But who knows if it's going to be this choppy tomorrow? Logical thinking would say that it should be, but we all also know that the market is not necessarily always logical. But that's just my take. Was watching via Facebook, but it's too unstable. Well, I know they run it through, I think, 3 different services, 3 different streaming. While you bring up the topic, I don't think I've discussed Meta with you. And Meta is a great technical stock to look at if you enjoy being a technician. You may enjoy looking at the rally that preceded the decline. You've heard me a few times in this session say that I enjoy thinking this way because I always think of stocks as having personalities. And just saying, if this is the way that you rallied before, what's to say that you won't rally like that again? Look at how that measured move helps you pinpoint the high that was made on Thursday. So you've got a pattern here that not only helps us find resistance, but does put it in a little bit of a problematic spot. Because what does this symmetry also tell you? It's a reversal of what the heart of every trend trader looks for. It is a low and a high, then a lower low and a lower high. So as you see that pattern start to emerge from a certain time frame, from a certain perspective, there is a bearish trend. Now, all of this is still bullish, but just comparing those advances can make sure you don't step in a big pile of blueberries, buying calls on Thursday's high. Okay, with all of that I see on the daily chart, I'm then going to take you over here to the 3-day. Because the 3-day is just such a good time frame for traders that are trying to swing trade and want to try to figure out some of the bigger picture, because this is another name that has a bullish relationship to its primary 618. And look at that 3-day squeeze that is forming. So I still think we're a little early to this idea, but I want to be able to come back to this. I keep thinking March of 24. Because this is when we're seeing some of the very first hints of rates starting to come in. Now, again, I'm just showing you guys some of the notes that I've been taking today. It's not a typical part of my afternoon conversation. But when I look at a chart like Meta and you say, oh, you're making some prediction out into March, it may not seem as relevant, or it may seem, you know what I'm saying? It's kind of like a lot can happen between now and then, and anybody can pick a target. But I'm thinking with that much time, these 3-day squeezes are going to do something. And when Meta clears the 618 of its most recent correction, that, Fibonacci proportions would have us be looking at 464. A more bearish market, maybe that's another way of saying it, is that if you look at this and you say, I want to be bearish because that is the campaign swing that is in control, well, then it should have failed somewhere below this. If it does, well, then yes, it can keep moving lower. But above that, it just puts the wind to its back. So you take that 3-day squeeze, you give it all that time it needs to get through the noise. You look out here into March. Maybe that hits. Maybe it doesn't. It's a 13% chance. But what I'm just saying is that's that big picture outlook into what can, because you don't have to hold the trade till March either. What if January and February hit with that good bullish seasonality like we saw this year? These things are looming out there. So I just want to make sure that, you guys at least have my take on them. The afternoon continues to try to enforce the pin. Like I said, those moments where it's like, okay, let's try the short. Well, then everything just goes back to being stagnant, sideways, stuck. 51 again the price. Butterfly expanding out. But yeah, I think a big portion of the beginning of my career was just not giving into that feeling of wanting to buy puts. Because even an action that seems a little bit weak, a lot of times when you buy puts, the premium just makes it so that, you know, it doesn't have to go up for you to lose money. It can sit there and mark time, and that will also lose money. Most of the time, the market is not crashing. So, anyway. Sanjeev got some money on a SPX. Awesome. I'm glad to hear it. I'm glad you guys are hopefully being able to be a little more active than myself this afternoon. Again, I want to repeat that I think that that is actually still perfectly okay. During my paternity leave, I got a little bit more of a feel for that, or a reminder of what it's like to be completely detached emotionally from the market. And that's the state of mind that I know we all pursue, because then you don't care what happens, right? You just assess it, you're there when the opportunities show up, and you're okay with it and patient through the times that they're, like what we've seen this afternoon. I don't think I covered the 15-minute setup in Google. Like I was telling you, it's a little dicey to be saying, hey, let's buy the market here into the close. I don't know if Google wants to be bullish into tomorrow or not. The truth of the matter is that 140 is probably a bigger area of resistance, but I always like to try to look for end-of-day 15-minute squeezes, because they have a way of taking all the noise of this close, an afternoon that's been mostly sideways, and resolving that compression tomorrow. From there, it's just the question of, does it resolve up or down? This was an awesome bullish signal, right? Because it's using the tree line as support. This, to me, I'm not so sure. This, to me, seems like it may want to come back here and actually test 136.75. So, I don't know. If you like that, maybe it's helpful. I will not short it because the bigger picture daily chart is so bullish. But I'm just a little hesitant on buying the 15-minute for those reasons. Been looking for some places to try and buy CyberArk. That chart really refuses to pull back, mostly noise here around 170. But that's another big picture if you're just working on your watch list. You can see, hopefully, if nothing else, some consistency in the way that I like to review these, which is to say major swing high against a major swing low above the 618, which, look at this again. I know it's easy to do this kind of quickly and just point out like, oh, this is what we do. This is what I do. But look at how many times it was sold at that exact level. And not only, it's sold in a way that creates these wicks. That is the top of those moves. So you've got to be aware of it as resistance. But then as that proportion is cleared, then it starts looking like the old high. Then it starts looking like extensions. And if nothing else, what we've all seen from, where is it here? Hackers of MGM and Caesars up the ante as cybercrime crashes the corporate party. I was talking last week about how when I talk about names like CyberArk and Datadog, CrowdStrike, it's easy to, like, in my mind, I just want to be bullish this entire sector, and I'm just looking for the best names to try and buy. But then you have stories like this, and I think that helps emphasize that, it's not going anywhere. If anything, it's becoming a bigger threat every day. And that's why these are the kind of companies that I'm wanting to buy. You talk about a macro view. That's a macro view. That may take a long time to unfold, and there will be volatility along the way. Think about the volatility through here. Think about how stressed out, over-leveraged shareholders were. That's all it is, right? In so many spots in the market, it's just that over-leverage getting wiped out because you don't catch a single bid before the company reports earnings. It's just desperation every day. So if you're going to be shaken out, you are, and then earnings hit, and all is forgiven, right? It's just a huge recovery. So I just think that's a name that you kind of, I mean, maybe you could even sell the December puts at 150, what have you. If it's a big directional move, I would rather you have calls. But keep that sector in mind, keep some of these names in focus, and then keep your names, your watch list, your, what I think are macro and fundamental views, keep them in check with a moving average. Whichever one you decide to use, you start getting below that mean moving average. Don't just keep leaning on your idea forever. At some point, realize your timing may be a little bit wrong, but until that happens, I'm going to keep leaning on those ideas. Amazon has that 3-day squeeze, but is stuck at 140. SPX sitting at 52. So we would have been able to make a little bit of money on the fly, but like I said, it's just it was a very thin margin, I believe. We'll see what they end up actually settling prices for here. Been watching Home Depot. For those of you that are, again, into this voodoo line study set thing, some days I think about how I should just throw everything away except the squeeze and the voodoo lines. I mean, I don't think I'm actually going to do that, but I am going to take a minute here to show it to you in Home Depot, especially because I know a lot of you out there that on a day like today and in being tuned into this broadcast have probably been following John and his work for a while, along with, of course, the full group of Simpler. But I say that way because if you have followed the squeeze for years, you know that we're always looking to this because a big move has the potential to occur. And then the eternal question was always, which way is it going to fire? Look at the way it failed at this fire line. These levels were here as it was approached. They are not plotted after the fact. You fail at a fire line, and then you make the shift from a low and a high to a lower low and a lower high, and look at how the squeeze is resolving. So I should have something in this, but it goes back to it's just the honest truth. It's like so much of what I've really been working to refine for myself is like, if I'm going to short, I do it through the SPX or the NASDAQ, the broad-based indices, or the broad-based, right, indices. I don't go as much into individual stocks. That's probably something I should change because looking at stuff like this, that's a great little move to be a part of. So anyway, they won't all be that perfect, but if you just follow a study set that works in a patient and consistent way, this is some of the best stuff that I know to give other traders. And thankful every day that David came up with it. Tiniest bit of a bid here. This is just enough of a bid to throw off anybody that's doing the 5 wide iron fly, right? Because most of us, like, I can't do 5 wide iron flies. I have to do them 10, 15, 20. 5 wide unbalanced, you bet. That's a whole different discussion. But if you're just doing 5 wide even verticals here, and then they close it at 55, that's just enough to throw that off. That's why I try to have the discussion with anybody that's really dialed into this stuff. And if you only understand iron flies, take the time to move into the unbalanced, because then you have the benefit of the pin if you get it, but then you only have risk in one direction if they close it, in more of a directional way. So the only thing you have to figure out is your strike and then above or below it. So I hope you guys found something helpful in the conversation this afternoon. Like I said, I know it was a little bit scrambled today, and I don't know. At the end of the day, we could have made a buck or two off of that, but again, hopefully the conversations are helpful. We'll leave Monday to kind of See if Tuesday brings anything different. All eyes will be on FOMC for Wednesday, and then we'll see how things look from there. So, thanks again. Have a great rest of your afternoon, and I hope to see you guys back in the chat room tomorrow.